Hey everyone, the professor here. So we are going to take a look at this trade over my shoulder. Let's go into this chart. And what I want to do is I want to first do a little teaching, and then we're going to get into the full crude oil analysis for this video. But I think it's important that if you take the time to watch a YouTube video, that you leave the video better than when you came in. So let me show you why myself and our members took advantage of these two trade opportunities. So maybe you can learn one thing, and then we are going to get into the full analysis. So as we go into the chart, first, let's kind of take a look at this buy situation right here. Okay, both of these trades were on Friday. And so what we did is, and I'm going to kind of do this from scratch, is we had obviously worked up our zones already. We had established, okay, that this area was a nice area for supply and demand. So we had this zone, which is the yellow box, lined up already here for us. Now, when we saw price begin to break up, what I did is I went ahead and threw a Fibonacci from this low up to where we began to see this reversal here. So now we knew that we were looking at, we had the zone here that was established. We had the 61.8, and then we had our stop loss down below this low right over here, but it still gave us an awesome risk to reward ratio. So once price came into our buying area, as you can see, okay, and here you can see that this was almost a 4-to-1 reward to risk going back up to the next zone. We took this buying opportunity here. Okay. So again, there I wanted just to show you how you can mix in definitely zones. Support and resistance is huge for me. If you know nothing else in trading, you can make money with only support and resistance. Now you add some Fibonacci levels, you can get a very tighter entry and minimizing your risk. So going back into this chart here, this was our buy situation. So then later that morning, we ended up selling. Well, why did we sell? Well, we came back over here, and we looked that we had, let me grab my arrow. We knew that we had levels of the support and resistance up at this 91.24 area. So what we did, I'm going to go ahead and remove these fib levels, is that we were sitting there waiting in that area, and we made our stop loss up to the next zone. Okay, but again, this was a 3.58 reward to risk. And so what happened here, as you can see, price came right back up to our zone, which took out the highs from the previous sessions, came back up here, rejected it once, twice, three, four times in a 15-minute cycle. So it rejected it for over an hour, and then price just melted right back down to our next zone. So we bought from the zone, and then we sold back to the zone. And I think that is crucial as we get ready to begin our full analysis, is that you understand that if you only know support and resistance, you're a new trader, you're confused, or even a seasoned trader, like that to me is number one. I need to know where support and resistance is, because that will determine whether I'm going to enter or whether I'm going to get out. That is just one of the components. Yes, I use fib levels, and yes, I'll look at the 50-day moving average, but support and resistance has to be the foundation to any trader, in my opinion, because if you know nothing else, support and resistance will make you money in this market. So today now, we're going to dive deeper into crude analysis. I'm going to give you my typical Sunday multi-time frame analysis. So if you watch this entire video, at the end, I'm going to have a challenge question for you, and I'm going to give you the gap, and I'm going to give you some possible entries early in the week, Sunday, Monday, of course, all depending on where price opens on that Sunday market. So let's go ahead and jump into our full analysis of crude oil. Okay, so let's first deep dive into the daily chart here. We'll kind of take a look at what the daily has done over the past few days. If we throw a fib level, okay, from that high to that low, and we expand this, then first of all, we can definitely see that the 61.8, okay, was rejected. Okay, so we closed much lower on Friday due to that drop that we just talked about a little while ago. So price came back up, took about 50% of the liquidity of this candle, and then rejected the 61.8 ratio. So that's kind of important to know because that also tells us that selling pressure has been shown in this area. If we look at the last 3 days, right, a wick, and a wick. So selling pressure right around that $91 mark seems to be introduced every time that price enters that price area. So, the first note we want to make is that 91 to 91.20 dollars a barrel seems to have a strong level of resistance. Now, does that mean that price is not going to go higher than 91, 91.24? Doesn't mean that. It just means that based on what we are seeing, we can see that right now, those are strong levels of resistance, and we can't ignore that fact, okay? Because if price goes back there again, we are going to sell again until price shows that it's going to close higher. And that is the biggest takeaway from the first part of this video. Candles have to close because if not, you don't know where price is going to go. A wick is an intention, but is not a closure of a candle. So as we go back into the daily, that's the first thing that I want you to take a note of, is that this area here is our kind of areas of resistance right now when it comes to the daily chart, and really every chart, of course, over the course of the last 3 days. Another thing I want you to note is that we have not made a new high, okay? So even though we are still in an up pattern, as you can see right here, okay, we did not make a new high. Now, that doesn't mean we're not going to, but we can see that maybe this is the first step of price beginning to walk it back down. So we have to wait and see. As you know, price, and I'm going to grab a brush, right? When walking down, goes down, up, down, up, down, up, and then usually we see another leg consolidation, and then we move the opposite way. Up, down, up, down, up, down, up. Okay? And again, as you can see by my drawing, I am not an artist, but I think you understand that's how price moves inside of every chart that you see. So when it comes to, let's delete that, Picasso, when it comes to price action, we have to wait to see what is the next move on the daily. Okay, whether we're going to come down and create a lower low, or we are going to shoot back up into this area right here. Okay, so that's kind of interesting to note there. And I'm going to go ahead and remove the fib levels. So now I want to go ahead and drop down to the 8-hour chart. Now on the 8-hour chart, you start seeing more candles, right? You start seeing that we have this small little box here. And so we begin to analyze what price may do, because at some point, price has to either break to the upside or price has to break to the downside, or we just consolidate in here for a little bit. So I like looking at the 8-hour chart, because now with the 8-hour chart, I can definitely say that on this scale, we know, as we talked about before, this tends to be our high area right now. And then this is our low area, which actually coincides with a strong area of support and resistance. So we are now working within these areas here. And this is the way I approach my trading, right? We talked about it earlier. You've got to understand that support and resistance, and you have to see what the candles are doing. So now that I have these kind of workable areas between 91 and 88.50, I want to walk it down to the next time frame. Okay. Now I want to walk it down to the 4-hour, because now I can begin to see price action at a different level. So here we can see we had rejection. Here, we can see we had rejection. So we have a floor here now that's been a strong floor. Here, we had a wick. Here, we had a wick. Here, we had price come into the box and not close above. And here, we had a touch and a drop back down. So what I want to do is I want to challenge you here on this 4-hour chart, okay? Here, based on the 4-hour chart, based on what you see right now in that chart, what I want you to do is that I want you to go down below into the comment section and tell me, based on the price action that you see on this chart right here, do you think that we are going to go back up to that 91 area within the first 4 hours of trading on Sunday? Or do you think we're going to drop back down into the lower areas? So head down to the comment section. I'm going to respond back to you in the comment section, but I also want you to begin to understand and look at price action. And the one thing I want you to look at is this candle right here, okay? Looking at where this candle wicked, about 50% of that liquidity, right? We made a pullback up here, okay? Where do you think price is going to go? Now, again, it's all speculation, but based on these candles, are we making higher highs or are we making lower lows? I want you to answer that in the comments section below. Now we're going to drop down to our 1-hour chart. Now we can begin to see, okay, kind of this is where we finished off the day on Friday. Now, if you notice right here, there is a price gap. Now, we did come here to this area right here, but if we look right in here on this 1-hour candle, we can see that according to this trading view chart, okay, there is still a little bit of a gap that was created inside of trading view. I'm not paying much attention to it because I don't rely on the trading view charts. I rely on my broker charts for any gaps, but keep this in mind that it appears to be a very small gap right in this section right over here. So now that we understand this price action, right, now we want to begin to look at a couple of different things. And I want to kind of show you this because you've got to trade understanding different opportunities, right? We had this area here that we identified earlier, okay? And what happened here? Price, let me grab my arrow, price came into the zone, right, and rejected it. So because we know it's a strong area, this is a great opportunity to say, okay, I want to take a reward to risk. I want to go into this box area, right? However that may look for you. I want to go just above the box, but I want to take it down to our next level. And that's what we did on that initial sell that we talked about at the beginning of the video. And that gave us a 5-to-1 ratio on this 1 hour, right? So if you are taking 4-to-1s, 5-to-1s, that is amazing, because even when you lose 1 or 2 of these small risks and you win a 5-to-1, guess what? You can have 3 wins and 2 losses and you're still up way big on profits because of the reward to risk ratios. Those are the best type of entries when you can find them. They're not always ideal, but those are the best. So going back into the chart, this was just one way of trading this, taking this from a level of previous support, now turn resistance, okay? Here's another thing you could have done. Same thing here. You had price come back around and hit that level again. So same scenario here. You could have taken it here, okay? Now, again, if you are up on the terms, right, this created a teacup. And when you create a teacup, what happens is the teacup has to have a handle, and there was an initial drop there that you could have taken. So again, now you're incorporating the support and resistance. You are able to identify the kind of happy face teacup pattern and say, okay, now I have 2 things that are in my favor based on the things that you've learned. And so it is a high reward, low risk type of trade that you could have taken there as well. Okay. So we go back over here, and I'm going to go ahead and delete this candle right, or this right here. Okay. Now we go back over here. So I'm just kind of walking you with you I'm walking the chart with you so you can just kind of learn something at the same time as we prepare for the ending of the analysis and where we are going to go. Now we take this scenario right here. So we understand that we've got levels of resistance here, but how about this dip and rise here that didn't create a full teacup? Well, this is where then you can add another tool to your tool belt. Kudos to all the folks in my members group who cashed in heavily this week because they learned the Fibonacci levels with oil trading inside of our members area. And now what happens is, and I'm going to go ahead and move this chart over to make sure that you are good. What happens is now price came to our 61.8, which is, folks in my members group know, I wait for 61.8 or somewhere here for the Kmart blue light special, getting it at a better discounted rate, right? So price came here and gave us our 15 to 20 points that we talk about in our group all the time. Remember, you don't need big moves to make profits. This little move right here, that hit my 20 points, which is my goal on every crude oil trade. Okay, 20 points. Now, whether you want to trail it, that's up to you. For me, I like taking 20, get out, do that 2 or 3 times a day, and that's all I need. So that gave me 21 points right there on that little drop right there. So again, now you can see that within the same chart, within a span of time, we looked at an area of previous support turn resistance for a trade sell. Price came back up, made a teacup, same area of resistance, came back to be tested, another opportunity. Then on the third wave around, we had a Fibonacci level that played out perfectly at the 61.8, another trade level. And you can keep doing this over and over. And so as we kind of remove these fib levels here, okay, and then we kind of go to where price ended now, let's do this. Let's go ahead and remove this. And let's add another Fibonacci level here. Now, of course, this one really isn't going to come into play as much because the price or the session closed already on Friday. But look what we see here, right? 61.8, and price rejected multiple times the 61.8. And what did it do again? It came back up to this level, a little bit higher, but it came up to a zone. Okay, remember that levels are never a straight line. You have to give yourself a buffer, whether that's 20, 25 points. On crude oil, I like to do a little bit bigger, 30 to 40 points, because crude oil moves so fast. So again, that was yet another solid entry. Now, this was late in the day, so I don't trade after a certain time. This candle was the 10 o'clock candle. I had already made my pips for the day based on my trading plan. But again, many of our members took the sell right in here. Okay, because it followed the rules, which was it came back up to a strong area of support. So again, and resistance, I'm sorry, in this particular case. So again, just in this little area right here, we identified 3 different ways of trading crude oil, fib levels, zones, right, coming back and forth, both on a buys and on sells. So that's kind of the game plan that we do in our members area. And again, if you have not yet joined our members area, I'll give myself a quick shameless plug. $4.99 for the price of a cup of coffee. I don't know where you're going to get mentorship, private chat, guidance. We answer your questions, a group of community of people in there, over 50 now in that group, talking, chatting, sharing other charts for a price of a cup of coffee. People don't make guarantees, but I make you a guarantee. You will make back your $4.99 by the end of the month times 20. But again, you're only responsible for $4.99 a month. Come into our members area. Check it out. You have nothing to lose other than a cup of coffee, right? So again, I hope to see you soon in our members area. So let's go ahead and begin to put the final touches on this. So this right now are kind of the areas that I want to show you for Sunday, because we are going to do one of 2 things. Number one is we are going to identify this as the gap. So we know here that this is the gap because this is where price closed, depending on what price is going to do, right? And I'm going to go a little bit deeper here in just a second, and I'm going to give you 2 more levels to look at. So we know that this is the gap right in here. If price gaps, obviously, to a high point up here, and we'll make this green, right? Then usually what happens is price finds a level of support and resistance, in this case here, and then price comes back down to fill the gap, okay? Vice versa, if we gap down in here somewhere, and we'll make this one red, then price finds that level of support or resistance, right? And then from here comes back up to fill the gap. So those are kind of the gap scenarios. And again, I do not trade the gap unless there is 30 points or pips available on the gap. Now, what happens a lot on the Sunday gap is price gaps open maybe just 5 or 10 points. So it's not worth getting into the gap, but it doesn't close the gap right away. Then it moves in the opposite direction for another 30, 40, 50 points. At that point, that is an awesome entry to close the gap because now it met my rules of 30 points or more. So it doesn't mean that it has to necessarily open 30 points one way or another, but the gap has to be created with a 30-point gap or more if it doesn't close right away. So either one of those two would work as well. And of course, you always want to make sure that you use a lower lot size for gaps because gaps can stay open for hours or days, but in most cases, they usually close within 24 hours, if not right away. Okay, so those are the kind of our gap scenarios moving forward. So for right now, we might just be in a trending situation like this. Now, in my opinion, and shout out to the folks in our group, and I believe it was Sabrina in our members area that talked about, like, don't we wish that price always stayed in this small consolidated area? Because when it does, it is much easier to trade because it is a higher reward, lower risk. Because if we're just going to bounce like a ping pong ball, then we know where it's going to go all the time. But at some point, price has to break out of this section right in here. But for now, we have to trade what we see and not what we think. Okay. Yes, there are reports up there that's saying that crude oil could possibly go all the way up to 100 points a barrel, right? But for now, we don't know that. That is just speculation. That is just one person's opinion or one group's opinion. So the hardest thing to do in trading is to trade what you see and not what you think. I personally don't read all those news reports. I may hear it or I might look at it and I may say, okay, but it should not influence where you're sitting, meaning you want to trade what you see. Now, if everybody's saying crude oil is going to go to $95, $100, then maybe your strategy is you only buy the dips because you feel it's going to go higher. If they're saying crude oil is going to go down to $40, maybe you only sell the dips up. So you can choose one side or the other, but again, use support and resistance, and you will lower your risk and increase your reward because you're trading what you see versus what you're hearing. So as we kind of go back to our chart now, and let's kind of come back to reality here, this is what we are seeing right now. Okay. So what I am going to do is as we move forward throughout the course of the week, okay, you want to look at these opportunities. So for right now, the only possible entries are that price comes back up here and we take a sell, something like this, right? That is one opportunity there, or vice versa, that price comes back down and then you take a long, because until price doesn't show you otherwise, we have to stay in this area right now. The only thing that invalidates these scenarios right here, okay, is that price closes above. So if we get a closure above, then we know that price is probably going to close above, retest, and then go higher. Okay, that is on the higher side. If we get a candle to close down in here, let me drag this candle. Okay, so if we get price to close down in here, then we can expect price to do the opposite. Close down here, come back up to retest the former level of support, now turn resistance, and then continue dropping down. So again, these are the kind of scenarios that we'll continue discussing in the members area. This is what we update you on a daily basis. You get the extra videos, you get the extra analysis. So if you're not there yet, I hope to see you join this week, and we would love to have you inside of our members area. So that's it for today's video. I hope you got some value. I hope you got the opportunity not only to learn something possibly, but to kind of see crude oil from the different perspectives, because on every different chart, you will see price action that can help you scalp the market. You'll hear me say this over and over and over again. And by the way, if you want to impact a life, share this video, give somebody the opportunity to see something maybe for the first time, introduce them to trading. Thank God somebody did that for me 7 years ago. And hopefully I've done this for a lot of people as well. So share this video. Now, lastly is, if you've made it this far, I want to give you a shout out in my next video as well. So we are going to use code word crude oil. Wow. How spontaneous was that, right? Code word crude oil. If you reach this far, I want to personally thank you in the comment section. Go down below, type in the word crude oil, and I'll shout you out in the comments, and then I'll take the notes down and I'll shout you out in one of my upcoming videos as well. Thank you so much for watching. Happy Sunday. Today, while you're watching this video, I will probably already be at the Dolphins game. So go Miami Dolphins as they play the Denver Broncos. And if you're not from the United States, that's just the American Football League here in the U.S. Have a great week. Happy trading. Ask your questions in the comments. I will get back to you within 24 hours. But if you want to take your trading a little bit deeper with real people, real results, no hype, no fuss, join our members area. And I hope to see you there. Have a great week, everyone.